What is up, you mortgage world? Welcome to another Monday mortgage update with me, your host, Sean Grapevine, Director of Agent Direct, coming to you live from our studios here in Atlanta, Georgia. I am joined by my co-host at this week, as with every week. He's a man who needs no introduction, but gets one anyway. As Ben Bell is to manual underwrites on manufactured homes, so my co-host is to steadying our ship in turgid and tempestuous 10-year seas. As much a staple to you mortgage as Nicole Perino is to open houses in the Philadelphia metro area, ever reminding agents that they can run, but they can't hide. In the same way, our co-host reminds BIPs that they are, in fact, his bidding doers. The man who talks to his Bloomberg terminal in the same caring way Todd Bitter talks to the least of us LOs, myself included. He's the man who coaxes pricing exceptions from wholesale lock desks the world over in a way not unlike Sam Abazari coaxes the full potential from each and every person he coaches. He's the Baron of Ips, the Lord of the Locks. He's the king of collateralized debt, the Colossus of credit, the awesome Austin Koenig. Welcome, Austin. Happy Monday, buddy.
Happy Monday, Sean. Thanks again for a great intro. Obviously, great to start off the week. This is the last time we have a market update in September. This month has flown by. We're approaching Q4 very quickly. At the end of the day, crazy how fast this year's
It's
flown
crazy
by.
to me that September is not in Q4, just from like its vibe. I feel like
Yeah,
it should be Q4. I mean, I know how math works, but like I think vibe wise, September's in Q4.
it's a Q4 feeling. It says Q3, but it's really Q4. I completely get it.
100%. Thank you for your support.
Oh
Did you
yeah,
have a good weekend, Austin?
yeah. It's well, speaking of the Philadelphia area, open houses were a very wet experience. Is rained here like crazy over the past 2 days because of one of those tropical storms that kind of just sat and dumped rain over the Philly area. So not much going on over here. Very rainy, but we're staying dry, and hopefully sunny days are here to come.
Well, speaking of raining on parades, let's take a moment to see if we can't find a few rays of sunshine in the dark and stormy night of the mortgage world that we are making our way through. Wow, that was like three just sort of tortured metaphors in one sentence.
Yeah.
Last week we had the Fed meeting, and then Fed minutes, and then we had the aftermath. Why don't you tell us a little bit about what happened last week?
Yeah, so I think everyone became familiar, if they weren't familiar with it already, that whatever the Fed dot plot is does mean quite a bit. And we saw a revision upwards on the Fed dot plot, right? So, we had talked a bit before, like, do we have another hike in the books later this year? Do we not? With the dot plot coming out, we kind of now are expecting at least one for, the rest of the year. So there's two more meetings, and we might get another 25 bips. But what was really driving a lot of the volatility too is the lack of cuts we're expected to see next year based off of where the Fed is projecting. We've kind of had a lot of different discussions, right? Are they going to cut at the end of this year? Are they going to cut next year? What do they need to see to get cuts? A lot of that was a little bit more clarified by the Fed and saying that they really do mean higher for longer. And, the longer term treasuries, especially like the 10-year that we talk about quite a bit, made a move to kind of match what the Fed dot plot had. So definitely tough for mortgage pricing, not great. But at the end of the day, we have to, we're all playing in the same ballpark, right? So we're going to try to make the most of it. We have a lot of investor options. And for those people that are pricing aggressive in certain areas, you might not be all the same lender, but you just have to really open up your options and see what's best for your client. Same things that we talked about before. Open up the rate stack. There could be some value in there, nonetheless. Premium got hit. Doesn't mean we need to. You might not always have the best par rate, but there might be some good discount rates in the rate stack that we can really utilize and be competitive with.
Yeah, and I mean, unfortunately, higher rates do have an impact on home affordability, but
Hmm.
we have to realize. I think it's important to keep in mind that higher rates are a secondary reaction to uh, unstoppable growth in wages over the last 36 months. That unemployment is at and continues to be at an all-time low. GDP growth is projected to be much higher than economists originally thought it would be. I mean, Hugh, well, I think this also offers some insight into how accurate a dot plot could be because economists expected us to be right in the thick of a recession right now, and GDP growth is too high, uh, employment levels are too high, wage growth is too high. Like everything is still too hot for the Fed, and that's why they're talking about keeping rates higher longer. So I think it's important to realize like it's not rates. Yeah, it sucks. They're high, but they're high because like everything else is high, right? Like they're a reaction to too much good news. And so like and we're seeing that, right? Like we're getting a record number of loan applications, credit pulls, pre-approvals, locks, and fundings in Agent Direct every month. And I know that's true for a lot of our branches as well, because loan officers are dropping out of the industry. Inventory is coming back in a lot of places. The real estate market's fine, right? Prices are going up. So I mean, yeah, it sucks. Like I don't want to quote 8.25% ever. But fact of the matter is like it's a reaction to how well things have gone. Is that an accurate summary?
Yeah, and I think one thing that you know the Fed is kind of like aligned with you in saying, yeah, things have gone better than expected, right? In terms of economic resilience. But with that being said, there's still some, things that we'll have to pay attention to, and further developments may cause revisions for that dot plot, right? One of the things that we frankly have to, kind of speaking on affordability, right? Just consumers taking out debt to kind of keep the same lifestyle of the cheaper money world, right? We'll continue to see how that consumer debt maybe translates a little bit to defaults or any sort of other economic slowdowns, or does that get sped up if there are some job losses? The unemployment rate of 4% may feel more like 6 or something along those lines based off of like defaults in that world, and how do we kind of maneuver that, right? That's where it's going to be interesting to see. And I think with all things with economics, right, it's a lagging, uh, you know, reality, right? We're always backward looking. It's always hindsight in the world of economics. So, what we have today is what we have today. But, after Q4, like we're talking about, how does the Fed change their tone, or, what dot plot are we looking at then? That's going to be really curious to see. So I think we have a lot of unknowns, but with that being said, we are where we are right now because the economic conditions have been resilient, and the Fed has to uh, use that for their playbook. Like it's kind of like football, right? Football is on all weekend. If the defense is giving you one look, you have to play something on offense, right? As vice versa, and the Fed is using their playbook based off of what's presented to them.
Sure, yeah. And I'd rather the situation be like this than the Fed, continuing to lower rates because
Hmm.
we're stuck in the depths of a recession. Unemployment is high, property values are going down. So, if I had to choose between the two, I'd choose this one. But I would prefer the middle ground. So, that was last week. What do we have coming up this week?
So we have a GDP and PCE reading, as well as some housing data, right? I think we have new homes. I think new homes is coming out, as well as I think we have at least home prices also coming out tomorrow. So a little bit of housing data. I think it's the Case-Shiller index that's coming out tomorrow. I could be wrong, but it's two of those that are coming out tomorrow, as well as GDP and PCE to really round out the week. There's nothing today, but I would just generally say one thing we also have to keep in mind is there's the government shutdown discussions that are coming up to the top of mind. And
So fun.
um,
So fun.
yeah, so that doesn't help our story either. But that's going to be a lot of back and forth this week, as all things politics. It's pretty tough to give any sort of prediction or insight, because that is literally all politics, and both sides just have to come to some sort of agreement, right? So we'll see how that plays out. That could also kind of throw things for a little bit of a loop here too. So all things considered, we have a little bit of drama, to kind of keep an eye on this week, because politics, there's not a calendar for that. There's a little bit of a date of, hey, this is when a shutdown might happen, but what day does one senator say this, or yada yada yada. I can never tell you that. So just be on the lookout. Like, if you like it, lock it. Who knows what is going to come up in the next hour when we have this sort of thing happening.
When does GDP come out?
I think that is Thursday, but let me put that to the test real quick.
So Q1 was a growth rate of 2%.
Correct.
Q2 growth rate of 2.1%, and people are kind of expecting more of the same. Is that right?
Yeah, this is just like an additional like reading on Q2 at the end of the day.
Oh, I see.
So
Okay, this
we'll
isn't
be
that
this,
makes sense.
and we have the core PCE reading, which is a little bit more of a an accurate thing, as well as initial jobless claims. That all that is on Thursday. So Thursday's a big day. Tuesday's a big-ish day. But with all that being said, there's just a lot of data that's coming in the next week, of course, with jobs. Um, and I think the fiscal part of the government needs to get their act straight, and we'll figure out
They are.
that at
They're
the
they
end of
they are they are careening about our timeline like Sergio Perez trying to pass Kevin Magnussen into the hairpin at the Japanese Grand Prix, which is to
there we
say,
go.
not very well and with poor decision making skills.
There we go. There's our
Did,
European sports reference for the
there you
week.
go. Hey,
We can
check it
end it
off the list.
here.
Did you watch the race yesterday?
No, it was 1 a.m., so I just didn't even watch the playback either. It's just way too late. It's the season's already over, right? At the end of the day, it's Max, and what place does Lance finish in the driver's standings? That's basically all we're watching for, right?
Not high. Not high.
Not high,
Yeah,
not high.
not high. It's leaving plenty of room for improvement for his breakout season next year. So, all right. Well, we'll it's not to make this too somber of a mood here, but we the higher rates go, the more work we have to do. So, we won't extend this any longer than we have to. But before we go, tell us a little bit about the Loan Store release.
Yeah, so we talked about on Monday of last week. We also had the Daily Sales Huddle, which I really recommend you guys go back and watch if you didn't get the chance to tune in live. We had Nate Schumacher on. He's our AE, familiar face as well for those of you who
Nady
work with
boy,
us.
love that
Yeah,
guy. What a
he's
legend.
the best. And so we have great people over there. Their pricing is going to go live and arrive today. Keep in mind there are some limitations too. We have conventional and VA that's going to go non-del, and they have some other great ancillary products, which I'm not going to talk the full, the full scope of those on here, but go watch the Daily Sales Huddle. There's some great things there. We'll be releasing the SharePoint documents and give you all the resources you need for any sort of marketing or just kind of reading through the nitty gritty fine print to get a better understanding of those products. So that's something to be on the lookout for too. But pricing is going to go live. Nate's there to help support you guys, as well as obviously all of our team here. And office has been trained. Our team in the lock desk, they're all squared away, good to go. So we have we have full confidence in that. So just be on the lookout for that, a new lender option. And it's good to have some competition as well for those like typical conventional and VA things. They are only licensed in 38 states. So keep in mind, they're really expanding that quickly. But and we're actually posting an email at about noon, just as another reminder. Make sure, depending on what state you're looking in, that they're actually licensed there too. Obviously, they won't let you submit a loan they're not licensed on, but just one of those things to kind of say, if you're quoting that price, make sure you're actually licensed there for the loan store if you are looking at them. So that's that. 11 Mortgage is another one that you might be seeing some stuff on. That is coming in October, and it's going to be kind of a small wave rollout. They're pretty sharp on VA stuff, a smaller lender, but they're someone that we want to add for especially our VA experts. So That's something that we've been working on in the background, and we're starting the training on now. And October is kind of when we're going to be rolling that out piece by piece. But 2 name drops there, so exciting stuff.
Wow. 11
But
score. 11
we'll take
mortgage.
it.
You got a couple more in the chamber for us over the next few weeks or months?
I have some other in the chamber, but I'm not gonna, throw
It's
that
okay.
stuff out there. I don't want to. I don't.
You can tease it. You can tease it.
Let's just say there's some other like more non-QM / portfolio products that we're working on a broker only basis. But I'm not going to say the names out there yet quite yet because obviously things are still in the works for even the approval process. But hey, we're going to be rolling that out. So October should be a big month in terms of adding some notches in the tool belt. So we're excited for that.
Sweet. All right. Well, I appreciate your time, Austin. I appreciate you guys' time out there in TV land, and let's work hard to go get some loans in this, like I said, tempestuous 10-year environment that we are going to come out the other side winners. So have a great day. Let's go get some loans.
Thanks, guys. See ya.